When you own your own business, everything depends on you, and it can be hard to take off even one day from work. But what if a serious illness or injury prevented you from working and you had no income for months? How would you, your family, or your business survive, and what would you live on? Disability insurance is coverage one may need to help protect yourself in the event of a serious illness or injury. As a business owner, this coverage is even more important because it helps protect the income of your most essential employee, which is you, and keeps your business alive. Today, I will discuss how disability insurance works, how much protection one should have, and how much does a typical policy cost. There are two types of disability insurance for people who work: short-term disability insurance and long-term disability insurance. Short-term disability insurance provides temporary income protection for employees, typically up to 6 months of disability. Long-term disability insurance provides protection that lasts for years, depending on the terms of the specific policy you get. Now, disability insurance for business owners works a little differently, and the process of getting coverage can be more complex. Many insurance companies require proof that you've been self-employed for 2 years and will likely ask to see prior year tax returns. And short-term disability is typically bought as a group coverage by an employer for its employees and is difficult and expensive to obtain as an individual. In addition to protecting your income, be aware that many also consider getting coverage for business expenses. So if you're unable to work, not only would you have a policy to replace your income, but another policy would help cover your expenses like rent, utilities, or employee salaries. So let's look at these types of policies. First is the individual disability income insurance policy, and this protects your personal income if you're unable to work due to injury or serious illness. Just like life insurance, a policy is an individual contract with an insurance company that defines specific terms. And I want to run through some of these terms and define them because they are really important to understand. First is the premium. This is the amount you pay for coverage. Next is the benefit, and this is the amount you receive each month if you're unable to work. This is usually between 60 to 80% of your monthly salary, and in most cases isn't taxed unless you pay for it with pre-tax dollars. Next is the benefit period, and this is the length of time you receive a benefit or a payment from your policy, which can range from 2 years up until retirement or until you recover. There's also the waiting period or the elimination period, and this is the amount of time after you are disabled until you can start receiving benefits. This can range from 30 to 90 days. It's also really important to understand this when getting a policy because everyone thinks as soon as you become disabled, you submit some forms and you start receiving payments when that's not how it works. Let's say you become disabled or seriously sick and can't work. You file a claim with the insurance company. You will need to wait 90 days, if that's your waiting period, until you start receiving payments from your policy. So always having a healthy savings account, emergency account, a healthy business or checking savings account becomes crucial because if you can't work and you have 3 months until you may receive a disability payment, you will still need to pay your bills, rent, buy food for those 3 months. Next is the definition of disability. Every policy has their own specific definition of what it means to be disabled to qualify for benefits. There is the own occupation definition, which means you qualify if you can't work in your specialty or field. Then there is the any occupation definition, which means you only qualify if you can't do any work at all. The own occupation definition is the better definition to have because it's specific to a particular specialty. This is very common with physicians. So let's say you are a hand surgeon, you become disabled and can't do surgery anymore. But you can still see patients face to face. If you have the own occupation definition, your policy will still pay you a benefit even though you can still technically work and see patients face to face. But since you can't perform your specialty, hand surgery, anymore, your policy will still pay you. If you had the any occupation definition, the policy would not pay at all because you're still able to work, even though you're not performing surgery anymore. So the own occupation definition is more flexible. The any occupation definition is very strict. There's also business overhead expense disability insurance. So if you become disabled, your business's income will drop, but your business expenses will continue, right? Including rent, utilities, taxes, salaries, etc. So a business overhead expense policy provides coverage that can reimburse a portion and sometimes up to 100% of covered expenses to help with the cash flow of your business and keep it running. Next is trying to figure out how much insurance coverage we need. To figure this out, start by estimating your current monthly living expenses like housing, utilities, childcare, loan payments, retirement savings, vehicle expenses, etc. Next is assess your monthly business expenses. So your rent or mortgage, utilities, insurance, salaries, benefits, other compensation, taxes, loan payments, etc. For individual disability insurance policies, you can usually get coverage to replace up to 80% of your personal income, and it's possible with some insurance companies to get coverage for up to 100% of your fixed monthly business expenses. If you have a substantial savings or other assets you can easily access, you can take those into account and adjust your needs accordingly. All right, what can we expect to pay for coverage? Everybody's lifestyle, needs, and business are unique. Your policy needs to be tailored with a specific benefit amount and length that meets your needs. A policy with a smaller benefit amount, longer waiting period, and shorter benefit period will cost less than a policy with a larger benefit, shorter waiting period, and benefit payments stretching into retirement. Things like your age, health, lifestyle, and occupation will all affect your premium costs. And just like life insurance, when you apply for disability insurance, they will look at your medical history, medications you're taking or have taken in the past, your family history, etc. One rule of thumb is to expect to pay between 1% to 3% of your annual income for a policy that offers the coverage you need. Disability insurance is one of the most important tools you can have to protect yourself, your family, and your business. So do your research and work with a professional that specializes in this area if you decide to go down this path.